Hey there, welcome back to the channel. Today we will be covering a few important events that took place this week which may affect and have affected the financial market. We're talking inflation, the Omicron variant, Black Friday, and some good news from the job and housing market. Stay tuned as we dive into all these topics and more. So inflation is one of the biggest buzzwords of this pandemic, though governments have been adamant that it is only temporary. However, a meeting this week with the Fed established that the sheer amount of inflation happening now is more than they had anticipated and laid out all the ways they are ready and willing to keep the financial market afloat if inflation does indeed stick around for longer than they had hoped. A few outcomes that they had outlined include reducing bond purchases in the short term and have an emergency plan to start raising the benchmark interest sooner rather than later. All this in an attempt to curb the spread of inflation before it becomes unmanageable. Insiders within the Fed meetings have confirmed that many members present showed concern that the price was already getting out of hand and inflation has already surpassed their initial projections. There is also a lot of eagerness to get the ball rolling on containment measures. This comes after a long period in which the Fed seemed to ignore the runaway inflation, causing a great deal of criticism from around the world. But when the inflation rate hit a record high in October, it seemed to scare them straight. However, the rate has since cooled slightly. Now over to the job market in the United States. For the first time in this pandemic, unemployment rates are finally dropping. However, it is important to note that as we move into the holiday season, especially the juggernaut that is Black Friday in the United States, many businesses are taking on more casual laborers to prepare for the expected influx of shoppers and purchases that usually come along with the holiday season. Though it is definitely still a reason to celebrate, these massive changes in the job market far exceeded the best projections from economists. Unemployment claims in the United States fell by over 20,000 over the last 4 weeks to just over 252,000 claims. That is the lowest this number has been since March 2020, a time before the pandemic really got its claws into the nation. Throughout the pandemic, as people had to stay home and lockdown swept across the world, many businesses had to lay off employees or close their doors entirely. This caused a cyclical domino effect, where more people were put in a position of having to conserve money and therefore were spending much less. Less money spent in the market means less money for businesses, who in turn have to lay off more employees, and the cycle went on and on. However, this Christmas, it seems that people are finally ready to open their wallets once again, and this increase in demand is finally helping to inject more confidence into businesses, who are thereby hiring more workers. It is important, however, to note that this rise in jobs may only be temporary, as inflation will also force wages to go up, and employers may have to continue working with skeleton crews. Once the boom of the holiday season is over, we may find many more people filing unemployment claims once again after their seasonal work comes to an end. It is definitely still an uncertain time in which it's important for us to be smart with our money. So while it is important to stimulate the economy with holiday shopping, just make sure you don't go overboard and blow your entire savings. You might need it. In a bit of good news, the housing market in the US has increased by 0.4% since last month. Now, we're always happy to see an increase like this, especially in a market as vital as the housing market. The new purchases for the month came in at a seasonally adjusted rate of 745,000. This is a 0.4 increase from the revisited rate of September that was 742,000. This number represents the number of houses that are purchased in the United States, though it was already assumed and hoped that this number would already be well past 800,000. Though the speed of this rebound is much less than what was hoped for and anticipated by economists. We all remember the subprime mortgage scandal of 2008 that caused the market to crash and how it completely flipped the world on its axis. As this pandemic has dragged on, the housing market continued to stall, and many homeowners began to fear that the safe investment that was their real estate would soon be worth nothing. Then real estate titan Zillow began a sort of clearance sale where they were getting rid of properties for much less than they bought them. There has been an enduring fear that we would have a repeat of 2008 now, when the global economy is in a much less stable place. However, this increase in the purchase rate of single-family dwellings is a good sign that maybe things aren't as grim as we had feared. So despite these numbers being much lower than analysis had expected initially, the growth is very much welcome and frankly, desperately needed. And just when it seemed that we were on the cusp of a full recovery, the coronavirus has stepped in once again to remind us all that it isn't going anywhere. With the emergence of the new Omicron strain of COVID, which emerged in South Africa and has since spread around the globe, the Dow Jones tanked once again, falling 900 points in the first 20 minutes of trading, and at the lowest, it dropped by nearly 1,000 points. Meanwhile, the S&P 500 index also tanked by 2.27%, and the Nasdaq fell by 2.23%. Although there is little known about the Omicron variant as of now, the number of mutations it possesses, said to be double that of our most recent terror Delta, has many scientists around the globe worried about what this will mean for transmissibility, deadliness, and vaccine efficacy. Many nations have already banned flights to and from a handful of African countries, and there are definitely more travel bans on the way. Other than the effect this had on the market, it also almost immediately affected the airline industry, causing many American carriers to drop by over 9% with the news, as some investors dumped their stocks as a precaution. Oil and gas was another victim of the news, as it fell almost 8% with it. With our fair share of experience of lockdowns and how quickly they can spread, we have learned which industries will and won't be affected by the news, and that's why thus far the losses have been very localized and specific. Originating in South Africa, the Omicron variant has many mutations, which is not uncommon for COVID, but the sheer number of mutations has caused many scientists to feel worried about how it will affect the outcome of the pandemic. It will take several weeks before we know for sure whether Omicron presents a clear and present danger to the world, but in case it does, the world is already gearing up preventative measures to try and contain the spread of this new, scary variant. Despite the skepticism on vaccine efficacy for this new variant, many investors responded to this news by throwing money at the vaccine manufacturers. Moderna stock surged by 20%, while Pfizer experienced a similar, albeit less intense surge of 6.1%. Thank you so much for joining me as we cover these major topics that are affecting the financial market right now. Be sure to hit that like button and subscribe to the channel for more important updates such as this, and I'll see you next time.